Hey, what's going on, guys? Edward here with another video. Thank you so much for being here. This time, I did it again. I just asked you guys on my Telegram group. I do this from time to time because I want to hear you. I want you guys to tell me what you want to see, okay? Same thing here. If you want to see something, maybe in the next video, just leave your comments below if you have a doubt about something particular, specifically more about Nasdaq and US 30, I would prefer. Because when it comes to pairs, especially to me, I don't trade them as much. I most likely maybe I will do a video later on the only times when I actually trade pairs. I will maybe be posting a video of that. Other than that, I'm just so into Nasdaq and US 30. This to me is just, I mean, if I would just only trade these two, that would be all. All right. So today, answering a few questions on that poll that I did on Telegram. So I see that one question was regarding Fibonacci. You guys wanted to know how I use the Fibonacci, if I use it or not, when to use it, and all that. This indicator, this Fibonacci tool, it's a nice tool pretty much to have an idea. It's not that because the price just stopped right here in the 50%, it means it's going to go up. No, it's kind of like the same. It's like any other type of indicator that is not going to be 100% accurate. No, just it's a tool to help you maybe to get a confirmation, a better confirmation, okay, to have an idea if if the price actually is going to bounce off at a certain area, okay. This tool, by the way, I'm just showing you here the Fibonacci right there. Let me just put it there. If you want to see my settings, I just double click on it and I will show you what are my settings right here. These are my settings for the Fibonacci. If you want to take a screenshot, you want to pause the video right there, you can just copy the same thing. Everything else is just stayed the same. Alrighty. So that's pretty much it, okay, when it comes to the settings. So now, when to use the Fibonacci? Okay, first of all, I use the Fibonacci to detect if the pullback is done. Like, you know that when the price is, let me just open this thing here. If the price is pushing up, it's not always going to be pushing up to the sky. It's not going to happen. It has to do pullbacks, okay? It's not going to be that easy for us. So the price is pushing up very strong. Like, for example, you can see here this very big push. No pullback at all. You might see the price stop a little bit, but that doesn't count as a pullback. A pullback counts, I will tell you exactly, when the price, let's say, from the bottom to the top, okay? You usually use you draw your Fibonacci from the bottom. In this case, from the bottom, when the price is starting to push up very low, right there, to the very top, okay? So right here, the pullback will count if it reaches any of this area. This is called golden zone. I've shown this many times. Between the 38.20 and the 61.8 is the golden zone, okay? So the price to count as a pullback, it should bounce and stop anywhere in this zone, okay? One thing is that the candle needs to close right there, okay? If it closes below, it most likely will continue to the downside. The price is not going to just stop right there. Most likely it's going to continue to the downside. But if the body of the candle stop right there, beautiful, stop right there, and you see this is a red candle, and then it's followed by a big engulfing candle, this is your trigger. That's your sign. This is beautiful right there to make an entry on a buy. You put your entry right there, stop loss below the zone, a few pips below, and then you follow. Where are you going to take your profits? Multiple ways to take your profit. You can take your profit to this last high, okay? Or you can aim to the 27 on the Fibonacci, okay? But you see what's happening right there. You see this beautiful trigger right there. Another trigger that you might see when the price is reaching or is doing this deep pullback is the pin bar. Okay, you can see this trigger right there. All right, that's maybe you might see a rejection like that, a big wick. That is a beautiful reversal pattern. So this is usually if the direction is to the downside, like here. This is a red candle. This could be maybe a green candle or red candle, doesn't matter. And this is a green candle, big green candle. So if you see this or the engulfing candle, that's it. That's your trigger. That's your entry point right there. And you should be taking profits maybe at this point or at this point. Maybe your first take profit here, second take profit right there. All right. If the wick of the candle reaches this point, it doesn't matter. Just what matters is where the body is closing, okay? And same thing will apply. I will give you an example on the top. It will apply and in different time frames. Like you might see maybe the body is like this in a 1 hour, but when you go in a 4 hour, it's actually like this. The price did not, the actual body did not close. So it depends on what time frame are you going to be drawing this Fibonacci. And I'm going to give you an example just right away. Let me just delete this. All right, so now let's jump in on the actual chart, okay? So you see this big push, right? From the bottom to the top. So you're gonna draw your Fibonacci from the bottom to the top, right there. You see the price is actually stopping in the golden zone. So let's see, this is how it looks on a 4 hour. Let me just keep, now I'm gonna start zooming in. I'm gonna look on a 2 hour, see how it looks. Look how this looks on a 4 hour. You see a beautiful engulfing candle already here on a 2 hour. So maybe your entry would have been here, boom, your stop loss below this zone. The price pushed up, came back down, but then it's not stopping you out at this point. You know, after let's say you wanted to take your profit right here. I'm gonna make an entry. Say I'm gonna make an entry there, boom. Stop loss has to be below the last low, okay? Maybe a few pips below the last low. So let's say you want to aim for the 2 take profit, so the 27 on the Fibonacci. All right. So this would be your first take profit. This is your second take profit. Okay. So what happened there? It's a lot of consolidation, of course, and this is a big trend. So this is going to take some time to actually reach. Let's see how long it took. About 9 days. Yeah, 9 days, 8 days, 22 hours. 8 days and 22 hours. So if you're willing to hold that, that's up to you. But that is a good point of entry. Okay, that is a very good point of entry. Now you see a price pushed up here, and you see, let's say, let me go ahead and delete this. You see a price pushing up, very strong. Use the Fibonacci. Let's say you were just following this. So from the bottom to the top, from the bottom to the top, you see the price. Maybe you were waiting for a signal here, but it didn't do it. The price just continued coming down. So sometimes the price will do a deep pullback, but at this point it doesn't matter. Like it's no longer like at this point the Fibonacci. This is a no-no. When the price just broke below and it continued to the downside, it's not going to work. Let's see how it looks on a 4 hour though. Let's see. No, still price completely went lower than the 61.8, and then after that it started to push up. So it was a deep pullback. It didn't count. The Fibonacci there didn't work. Okay, that's why I always tell you it's not going to work all the time. Let's see the next pull. So there's another push here from the bottom to the top. Let's see. Oh, this one. Look how beautiful this one is. Of course, this is a 4 hour, but look at how the big engulfing candle ended up. So let's say you would have entered there when you saw the 4 hour closing. So stop loss, it's kind of big. Take profit to the 27 at least, but you see how different it's starting to look now. So most likely you could have wanted to go in here maybe in a Let's go on a smaller time frame. Let's go 2 hour and see how it looks on the 2 hour. Still engulfing candle, beautiful. Okay. Let's see 1 hour. I think that was on the momentum was because of the maybe the market open here. It was 10 a.m. in the morning. And no, this was the actual opening. So it came back down. It didn't. You see how in a 1 hour it's creating just the doji right there. So big bearish candle, doji or pin bar, whatever they call it, and then beautiful engulfing candle, bullish. So you see where the prices stop just right there. By the time the market opened, it pushed down very strong, but then just stop right there in the 61.8. So that gives you an idea. Then you saw this massive pin bar, and then you start to see the price pushing up in this one. So you could have made a decision right here after seeing the pin bar right here. This is a good sign, and it's a good trigger on a 1 hour. Let's see on 30 minutes. I'm pretty sure it's going to start looking kind of different. Yeah, 30 minutes, you see, you're starting to see bodies actually closing below the 61.80. So it was not good for this time frame. So it was pretty much from the 1 hour and above for this particular setup, for this particular time. Now, like I mentioned, let's go ahead and continue. Not all the time is going to work. It's just an indicator like any other indicator. So let's say now you want to measure from this push to right there. Let's see, from this push, very low, to this last high. See right there, the price actually touched the 38 and the 50%. It touched the 50%, started to push up right there, but then it just started melting, just consolidation right there. Most likely, if you would have not taken, let's say you would have gotten, let's see how it looks on 30 minutes. Oh, let's go 4 hours first. Let's go 4 hours first. Yeah, so 4 hour, you see this is a 3-candle reversal pattern. This is a bearish, then you have a bullish, small candle, and then the next one is gonna pretty much be bigger than this one. So if you drag this candle all the way down here, it's a bullish engulfing, okay? So nice trigger, but still, like I mentioned, it's not always gonna work. Just because the price stopped right there on the 50% doesn't mean it's gonna go all the time to the upside. No, it's kind of like every other indicator, okay? Just to give you an idea. What's happening today is actually kind of nice. Look at this. So again, same thing happened from the bottom to the top, that last high right there. See where the price stopped on the just in the golden zone, giving us again same 3-candle pattern. You see this is a very nice repetitive candle pattern. So you see a bearish, see bullish. This one, if you drag this candle all the way here, it's going to be bearish, basically a bullish engulfing. Okay, so that's a good sign. It's already looking like it's breaking now the actual flag on a 4 hours. So it's about time to make a decision at that point. But because on Friday I did the entry somewhere around here, the same thing. I thought the breakout was actually going to happen here. I had this line here, so we saw the 4 hour. I got in and then I got stopped out. So today I'm just going to be more patient and just going to hold maybe for the price to come back up a little bit more. But anyways, see Fibonacci right there. And that will happen pretty much. It happens very often when the market is, like I mentioned, the market will not always go in an upward direction. No. The banks there and the market, they are not going to make it that easy to us. Okay, so it has to do pullback. It has to come back down, maybe break that structure, come back down again. And it's not always going to be this beautiful as well. It's going to be very noisy. Sometimes it's going to just do this and do this and then like this. So it's going to be very noisy. But you know, the idea is to from time to time use the indicator. Use the indicator. You know, from this push to here and see if the price is actually reaching the at least this zone. Then you find a good trigger right here. Or let's say maybe in the past there is a structure, right? There is maybe a support. So you can take that also as a second confluence or more confluences, you know. Price is pushing back up, right? It's coming back down to retest. So at that point, you use the Fibonacci from the low to the high, and let's see, you see how, you know, it will pretty much match right here. You are on a first, you are on a support. Okay, so that's the first confluence. Plus, you find the trigger. Plus, you're seeing that you are within your golden zone. Boom, you have 3 confluences right there, and then you can just buy. You know, buy, stop loss below the last low, take profit at least to the zone. Second, take profit to the 27. Simple as that. Don't get it complicated. Okay. I mean, that's pretty much it. How Fibonacci tool works. And you know, if you're still having some doubts, just let me know. Leave your comments. It's very simple tool to use. I already showed you the setups. If you want to put it the same way I have it here, you can see all that. And that would be pretty much it, guys. Thank you so much, actually, for being here again. Just follow me on Telegram if you want to see me trading live pretty much every day, sending the signals before the market opens, or even if I see something else, even outside the New York Stock Exchange, I will share it, okay? That will be all, guys. Follow me on Telegram. Give it a big thumbs up if you liked it. Subscribe if you're new on the channel. See you guys in the next episode. Take it easy, guys.